Hey everyone, welcome to another video. Today we're going to go over Bitcoin. I'm going to do a trade recap on 30R in 3 hours using 15-minute market structure and 5-minute execution timeframes. So let's get started. First things first, I'm going to go over just the 15-minute and below. I did not take into account the 4-hour. I did not even look at the 4-hour. It's not necessary every time because the reality is price is moving in fractal lower time frames to the higher time frame. So what I was using is the 15-minute. The first thing first is how do I mark out my market structure? This isn't a market structure how-to lesson, but I'm going to show you how I do it so that you can get some clarity on why I take certain entries, right? So the first things first, I traded Saturday. This was the time frame that I was trading within this area. So what I like to do beforehand is I like to take into account what market structure was for, for the previous swings, right? So I scrolled back. This is what I can see on my chart. This is what I was looking at. We have this massive swing high to swing low, right? So this is one big swing, right? During that time, we also paused and created a range here that did expand to the downside and create this low, this extreme low. So at the same time, what I like to see is, and I use this polyline, which is one of the tools here, to mark out where I see price bounce from. And this one in particular, I use it to show me ranges. So I like to mark out higher time frame or lower time frame, depending whatever it is that I'm trading, the range to give me expectations. So I can see where if price, what the expected order flow is telling me, right? At the same time, I use these curves. Usually I just use them to mark out and give me the idea of where the extreme is. Because if I'm focused on a lower time frame, let's say, and I'm very zoomed in on the charts like this, and I didn't have any of my market structure marked out, I wouldn't really have an idea of what's going on. So when I'm zoomed in on the charts, I use this to really show me, all right, well, this is one of the swing highs, and this is one of the swing lows. And what this does is it shows me previous market structure, but also my expected order flow, what the expected development of market structure is into the future of what I'm expecting it, what I think is going to happen. And so that gives me a direction to trade to and from, right? So that's why I use both of those. What I'm going to go over here in particular is on the 15-minute time frame when we had this pause, this range developed. This is a supply zone. You can see the price was very corrective in this case. And what do we have? Impulse. Correction, impulse, right? We had some correction here. We had more impulse. Now, because expected order flow was creating lows and was bearish, we would expect the highs to hold and new lows to form. So because this was a liquidation, we liquidated the previous highs within this zone, right, within the range. And then this is where price entered so much momentum and liquidity in the market that price just impulsively sank to the downside. We met the equal lows, price pushed up, and then once again, another impulse to the downside. So what I did here is I marked out the low, extreme low from this swing. This is the low that was broken, and this was the high. Expected order flow would tell us if we couldn't see any of this, that this high would hold and we would get another low. When this high was taken out, we now see that we took out a strong high because this high broke structure to the downside, right? And we had price break and close below, and it was a pretty strong break in structure, right? So we expected this to hold. When this doesn't hold and it's traded through and we get closure above this zone, I can expect that what we're having is a temporary, right, that could develop into the higher time frame change of character. So this is where we get that switch from bearish order flow to bullish order flow. Now that may have happened because something in here mitigated something to the left on a higher time frame. So this could have tapped into a demand zone, and the reaction out of that demand zone was what? Bullish, right? At the same time, if we take the external swing, we have this high to this low, right? What are we expecting? Well, anything that doesn't break this high or breaks this low is internal structure, right? It's substructure, because the reality is, although this is a strong high, the external structure liquidity is from this high or this low. and neither of those levels did we tap. So what are we expecting? Is we can say that we are in a complex pullback. So from this high and this low until one of these breaks, we're in a complex pullback. So what I like to do when we have that happening is I like to take into account only the internal structures until we tap what? An extreme supply or an extreme demand, right? So because the most momentum and volume came into the market in the form of bearish order flow, we have strong engulfing shorts, right? And therefore I'm expecting that if this is a change of character to the upside, that we're only temporarily bullish until we come into a supply zone that is strong enough to hold, right? And because this supply zone, or this extreme high of the low swing, was responsible for break in market structure to the downside, I would expect that the supply zone would hold and we'd get continuation to the downside. So I'm only trading internal 15-minute structure, right? And so what I have here is when we have this official change of character, now what I'm expecting is temporarily the lows are going to be protected and they're going to hold, right? And the highs are going to be targeted. So this high was taken out, liquidated, break-in structure to the upside, strong candle closure. Price pulls back down. What am I expecting? The low to hold and the highs to be targeted. I'm expecting more longs, right? So that's what I use. In this case, I'm only looking at 15-minute swings to basically make my decision. So I'm only taking into account, for example, like from this level to this level, this is one swing that I'm paying attention to. On the pullback, what is this? This is, although this is counter trend on the 15-minute time frame here, on the higher time frame, this can be pro trend, because on the higher time frame, we're showing that we are more bearish, right? But we did get a change of character here that signifies that what we're temporarily bullish. So in this case, this is a pullback. So you can see that in this case, previous to this move, the bearish is much stronger than the pullbacks, right? And so you can see that the most momentum is favored with shorts. In this case, what do we have? This is a much bigger swing long, a shorter pullback bearish, stronger swing long. We can expect what? A shorter pullback that's bearish, and then we could expect stronger bullish momentum, right? Now my trade was within here, so let's get into this. Now that we have our market structure marked up, I like to mark up my supply and demand zones, right? And so the first thing that I wanted to go over is, and we've talked about this in other videos potentially, but I did have some questions asked about this, is premium and discount. So premium and discount, the whole concept behind this is that you take a swing, right? And so maybe it's helpful if I leave my market structure on here, just so that you can see. I'm going to turn off the curves and only going to show you the polylines. Yeah, let's do that. So this is already market structure that has already been developed. My trade was within here. So what I was doing is I'll take one swing. So from this, let's say we'll start from here. So from this low to this high, right? And what I do is, this is just a fib tool, and I have it marked out to the 50% and the 1 and the 0, right? And so what I'm looking for is, if this is one swing, right? I'm looking for the pullback. After this takes liquidity, I'm looking for a pullback that does what? Comes back into discount pricing. Discount pricing is anything below the 50%. Anything above the 50% is premium. And why do I do that? Well, the whole idea is this helps me filter point of interests that are not something that I should consider, because usually price, you want a significant enough pullback to make it relevant to get an entry there, right? So for example, if, let's say, we know we're currently temporarily bullish, so what are we expecting? Well, if price breaks structure to the upside, right, and comes out of this area, and we mark this new swing up, we are expecting a pullback into what? Into discount pricing, right? We don't want to take a long, if this price pulls back, we don't want to take a long from here. This is way too soon. I prefer to increase my odds by filtering my point of interests if I'm going long into discount pricing, and if I'm going short, I like to filter them to what? To premium. So like, let's say the big swing here. And this is just a, I don't know if you've already known about this, but I'm sure you have. But going over for those that don't, if I'm going to take shorts, I'm only going to consider on this external swing, extreme swing, I'm only looking for point of interests above in premium territory. And these are the ones I have marked out. So if you don't have very much luck marking out significant levels or point of interest that usually result in those break-of structures, use the fib tool and take into account the premium discount pricing. It'll help you filter your point of interests a lot more accurately, right? So now that I had my market structure marked out, I did my supply and demand zones. So I'm looking for unmitigated zones, and I'm also looking for reactions. So if I look to the left, this is a supply zone. This is a, what do you call this? This was a sell to buy to sell, right? So what do we have? Price is selling here. On this massive wick, what do we have? Although price sold down here, you can see that price was bought up pretty quickly on this candle, so much so that we only left behind a wick and the candle closure was very small. So what do we have? This is a buy to sell, right? And so I like to see buy to sells or sell to buys as areas for unmitigated zones. Now, we don't have any structure in this area, so this is a very clean push. I don't like to take trades out of clean pushes either. So in this case, I can more than likely assume that this level is going to be swept. This video is not on that topic though, so we're not necessarily going to go into that yet, right? So that's just something to keep in mind. What do we have? Price pulls back down. Here you can see that we have a push back up. This is a buy to sell, right? On a higher time frame, it'll be more clean. On a lower time frame, you can filter this point of interest to much smaller than this, but we're only using the 15-minute, right? So this is a doji candle that we have. This is a sell candle that came in, took out that level. We have a pause in the market and this massive engulfing candle to the downside. Once again, we have no structure inside, so we have no inducement. Therefore, what? This level, just like this one, I think this level did, but this one has not happened yet, but I can expect it to what? Get liquidated. This will be the inducement because it has no inducement. So we swept this level. Now what does that tell us? Well, that tells us that demand is let's say demand is strong enough to take out supply levels, but at the same time, we did not have a strong candle closure above this level, and because we did not breach with a candle closure, this is not necessarily for me a strong level. It's a weak low. Now at the same time, I would like to see what happens as price develops, right? Because what did we do? We took out a strong high. So this strong high resulted in this push down. We have price crawling back up. Where do we have the most momentum and volume injected into the market that broke structure? Here. Price pushes up here. We get a reaction to the supply zone here. This is a sell to buy. This is another engulfing candle to the upside. Comes in, taps, pulls back. We have price ranging in here, makes a sweep, and then what? Comes back in, taps the extreme, pulls back down. When we see that price is building market structure within a supply zone or on a supply zone like this where we've already reacted to, we can expect that this zone is not going to hold. And that's why when we breached it, what did we see? A pullback. Now this pullback is pretty ranging, right? It's ranging a lot, so we don't really have a lot of volume in the market. So this is very corrective, and so we're waiting to see where the next impulse goes. Then we have price here sweep the lows. So previous to that, we have a low here, low here. This low took out those levels. You see price come back up, sweep, mitigate in this zone. We're not marking that out because it's not necessarily relevant at this moment. But what do we see? Price pulls back down. This is the extreme, and this is one big swing up. Now on the swing up, what do we have? What levels do we have that previous to my entries were unmitigated? If we only look at this up here, we ignore everything to the right, we have this. So this is the level that was responsible for breaking structure. Now, you might say, why didn't I highlight the entire candle? That is valid. You could highlight the entire candle, but it's not necessary for the type of trading that I'm doing because I'm only paying attention to what's responsible for breaking that structure. So on a 15-minute time frame, if we just took that high, let's mark it in red so you can kind of see it more clearly. This was a swing high. This is a swing low on a smaller time frame range. And then from here, what do we have? Price pulls back up, pauses, does not breach. Then we have a sell to buy. So price opens a new candle, goes sell, and then with aggression, it creates this big buy that breaks out of this internal range here. So we got a sweep to the downside. Price comes back, but that sweep isn't strong enough to break yet, so we get another sell to buy. And this sell to buy breaks structure to the upside, and it wicks above this, comes into the zone, mitigates, and then what do we have? A pullback. And this pullback, what do we have? I'm only using the wick in this case. Price comes back, opens here, and explodes up. Wicks above, comes back, and what do you call it? Closes the candle here. And now we're creating a range here. So we're creating structure in a previous supply zone. So obviously we're expecting price to continue long. At this point we had already wicked. Now we come out with a strong closure up above. So what is this showing me? Now we're very clearly showing very strong bullish intentions. The order flow is very bullish. So not only did we have confirmation of bullish order flow here when we took out this high and we took out this supply, but upon this pullback, this push up was much larger than the pullback. And so we had candle closures above. So this can serve as inducement for price to come into this supply zone, or just showing us that, hey, we probably just could continue long. So what is my expectation? I traded here, so what my expectation was that we're going to hold the low again. So I'm expecting price to come into what? An extreme potentially, and then to explode up and take out that high. Doesn't have to happen. You don't have to be right, but my zone that I traded was within here, and I used this 15-minute basically as confluence. So what did I do? I took this swing low to the swing high, and I wanted to see price pull back into a discounted demand zone. And that's where I was looking for price to rally from if it was going to continue long, right? So let's mark out this one too, just as the extreme. And then we're going to do it to band, right? So now let's get into what I was looking at on the 5-minute, right? So the 5-minute, I'm going to break it down here. And this is how I took my entry. So on the 5-minute time frame, I was looking at a couple different things here. So we're going to do bar replay just so that it's a little bit more clear. Let's do this. So we have this swing high. We took out liquidity to the upside, and we had candle closure. So what I'm looking for now is once we break levels, we're expected to get a pullback. The pullback should not take out the protected levels. It should just come into a demand zone that's strong enough to continue upside to the upside. So I marked out 2 demand levels that I thought were important, these 2. I didn't mark out the extreme because, I was looking for a small, quicker reaction. Usually what I use, the zones, when I look to the left, a demand zone here doesn't necessarily need to result in a complete reversal of price, and it usually won't. This, I'm not expecting to do this. That'd be kind of ridiculous. And if we were, the reason why also is because that zone is just not, is it even in discount pricing? It's too high up on the leg. So, I mean, in a way it could, but it's highly unlikely that this would be the reason why, especially if we have unmitigated levels below that were with much more volume. So you can see here that while we did break out of this level, price pushed up, paused, we had a sell to buy. This buy was not that strong either. The candle closure, the wick was pretty weak. So more than anything, this level was not something that I was looking to take longs from. I was looking for more of the decisional, maybe the extreme, but I was looking for this level. This is where we had the most momentum and volume injected into the market. So I'd like to see a tap of this zone. So usually what we can expect is if we're looking to demand zones on the left on a swing for the pullback, usually what we can expect is price is only going to use these as pullbacks to create more entries. Price is going to come back down and then tap, and then this might create pullback to enter on a mitigation or a liquidation that will later be used, and then we get more pushes to the downside. And usually when we react to a extreme or a decisional, that's when we start to get that shift. and then we see with aggression, something like that, right? So I'm using these only for pullbacks is what I was using it as, right? So anyways, once this push up, this reaction to a demand zone in here in this area, we liquidated. So this is an area that I'm looking for if, in the future to get some sort of reaction from, right? So I marked out this level and I marked out the extreme. These are on the 15-minute time frame, very clear, right? So now what I'm looking for is to see what happens. So if we go, let's do this, and then stop. So what do we just have? On the lower time frame, we have a reaction. So what did I, kind of like I was just showing, we are looking to get reactions from these zones. So price came in and tapped, right? We tapped this doji, the candle body of the doji, and we reacted by pushing up. This is what I would expect could be creating a flip zone, and that's what I was thinking. I'm like, this is basically what we come into a strong demand, we react, form an extreme that takes liquidity, we liquidate that level, and then now I'm looking for a mitigation of that for continuation to the downside. That's what I'd be looking for. So let's keep going, and we stop right there. So what do we have? Reaction, we form an extreme. We have two things we're looking at. Now, did I have to go to the 1 minute? I did not even bother with the 1 minute. We're using the 5 minutes. So I've measured out where I created the supply. I boxed out the entire candle body and wick, right? And then I refined it also using the 5 minute just to the body, to the wick, right? Just to the extreme. And so I wanted to see price respect one of those levels. So once price reacted to here, broke structure to the downside, created a deeper mitigation, also showing what this is not strong enough to take out any significant levels. So had this reaction taken out, let's say this previous sweep and broken structure, then I'd maybe be looking for potential longs if this was right in a discount level, right? But seeing as we have so many unmitigated levels before, patience is important, and I would like to take price short, right? So in this case, I am price is bearish on the 15 minute, so this is technically pro trend, but we also just had a change of character on the 15 minute that's bullish, right? So it's temporarily bullish on a complex pullback. So what am I seeing on the higher time frame? It's bearish, right? Temporarily because of the change of character, we're bullish, right? But right now we're in a pullback of a temporarily bullish leg, right? So I'm looking for shorts are going to be stronger. So I'm looking to short into a more valid level. So what am I looking for? Let's keep doing this. So here we are. Press play. How do I do this? Maybe you can do this a little faster. Tap. And so here's what happens. So in this case, what did I do? On this trade, I basically just did a market entry. So I waited for price to come in. Once I saw that it was hanging out in here, I'm like, well, on a lower time frame, it's creating market structure in here. We didn't get an aggressive reaction out of it. But once I saw the price respected and tapped and respected this candle body with the wick of the middle candle, I saw price was falling back down, and I took a market entry. So, and this was using the 5 minutes. So this is entry one. Now what am I doing? Considering that we got the reaction out of here, we formed an extreme, we broke structure to the downside internally, right? But we did get a deeper mitigation. So at the same time, price could totally take me out, but unlikely to. So because we are in a pullback of the leg. So I waited for price to come in here, and I executed a market entry just, a little bit above where if I would have set a limit, it would have been. And this is a much safer way to do it, right? Because what we could have seen is price, start to do something like this, tap into this zone before continuing to the downside. So once I saw the respect of this level and price was pulling back down, I hit sell, right? So now what I'm expecting is what? I'm expecting this low to go. So this is a targeted zone for me. And it's targeted because the reaction out of here did not create a new high, and therefore the price is going to liquidate this level, and I'm expecting price to come back into this this unmitigated demand, which had much more volume out of that zone. So let's keep playing it and pause. Let's go back 2 candles. One thing that I saw, and this might be pretty aggressive. It's actually a very aggressive entry. This is pretty crazy, but on the higher time frame, on the 4 hour time frame, I do this a lot. But this is probably the first time I've ever done this on Bitcoin on a 5-minute time frame. This might sound crazy, but this is on a lower time frame. Price is fractal, right? So what did we have? We had this strong buy. It looks like a strong buy. We had a very big wick, but the body closed very full to the top right up here. So very low wick on the high side, and then we continued into here. So what I can see is when price came down, we paused, we reacted to this range in here, and what did we get? A buy to sell. So once I saw this sell going from here, I felt it pretty safe to set a entry. Hold on 1 second, let's take a pause. Alright, so I'm back. So this was the secondary entry, and you see price usually on a lower time frame. We'll zoom into this so you can see on the 1 minute, but what this is a sign of is just that we had a pause. We formed a range on a lower time frame, and usually, this buy to sell, usually we get some sort of interaction from that. So the way that you could look at it is just the same way we saw this demand. We formed a reaction. We see this sell, or this buy to sell, right? The sell was engulfing and it broke structure to the downside. This same thing that happens on the 5-minute will happen in a range just like that. It's just on a lower time frame. And so because we have this range here, we could talk about the wick as well, but what we have is price came in, tapped into something here. We had a reaction. We don't necessarily need to see a take of liquidity on a 5-minute. 5 minutes worth of price action is within here. So we don't necessarily need to see something here on the 5-minute. We could see something on a 1-minute time frame. And what do we have? We have a doji candle, and you can see here that what we have is this. We have another tap. This one pushes down. We have price in this area, and this is forming a lower time frame range. And so for us, when we see something like this, we could see that price is buyers are trying to push price back to the upside. They're simply just not strong enough, and so there's buy orders here before this engulfing sell. So what we can expect is price is going to come back and tap into this range, even if it's just for a second, before we get a continuation to the downside. And so that's what my secondary entry looks like. It might sound a little crazy to take trades like that, but you can. This is what it looks like. So I covered just the high of the secondary candle. And so you can see when price comes into it, we tapped it. So you can see, what do we have? We have a pullback, taps it. As long as we respect it, we're good. And then you see that happen. So after that, what do we have? An aggressive reaction from this level, and price pushes down. We make equal lows. Price pushes back up. We have that pullback, and here we pause before liquidating that level. So what do? Look at this. We came in, tapped. This slightly takes out that low. So what do we have? This is a strong level. At this point, if you wanted to, now this is obviously there's more risk associated with entries like this. You could say that you could potentially be looking for a third entry if price came into that zone. That's not what I did, right? But you could be looking for something like that. And so, while this first entry provided, if it hits our take profit, would be 5.6 R. That's a very amazing trade. But the reality is you don't always have to take every single entry that presents itself. Sometimes you'll find smaller entries on, if you're patient, that just show very obvious signs that there could be an entry here. Now, I don't recommend you just taking blind entries like this. This basically was a reaction. So price came in, tapped something within this wick, pushed up. Because it did not break this structure, it held this the area that pushed into here. We got a continuation to the downside. I recommend that you just start keeping an open mind and looking for times that something like that happens. If you backtest it enough, you might find out when entries like this are valid, right? So had you missed the first entry, right, because it happened too fast, you could have caught an entry right here, right? Or the other thing is, let's say instead of taking this entire area, which let's say would still be a 5.6R trade, if you really refined your entry down to the extreme and you only took the trade if it came into the candle body, look at this. This trade itself would have been another 20R. That's insane. I mean, we're talking about between these two trades, you are up 40R, on a 5-minute time frame. Now, you don't always necessarily need to over refine. When you over refine, many times you will miss entries, or sometimes you'll just get liquidated, right? But especially if you're at the extreme, right? If I had my entry for this first one, just like this, hoping that price would just come in and tap the outside of it, it just simply wouldn't work. The reality is, when you're taking trades, you want to protect certain levels and you're targeting certain other levels, right? So if this is the extreme of this reaction that broke structure to the downside, then what we want to see, as long as this high doesn't get breached, right? And so to be safe, your stop loss could just be slightly above that level or at the equal highs or equal lows, right? Same thing here. We have this reaction. As long as price doesn't breach this level, I'm okay. My stop loss was just a little bit covering, barely anything, but just covered, right? So now what do we have? This is valid. This is a strong reaction that we got. So, price came in, tapped, broke structure to the downside. So this should hold and it should not breach. What I'm saying is that I'm not expecting price to come up and take out that level and continue, or to switch directions. It shouldn't happen. So I felt very confident holding that trade. So let's continue watching. I'm targeting this level here. Now, if you remember, we have no structure in here, nothing very clear. Now, the same way that I took this level, you could say, well, let's see what happens. If price reacts or respects this area, we could potentially look to take price long. Now, I wouldn't, because the reality is that we have the most volume within this range, and I'd like to see price come into here. But at the same time, because we have no strong structure here, on a pullback, I don't think it would respect it, right? But obviously I will still mark it out just to see what happens if price comes into that zone. And I did have that marked out, so let's see what continues. So price comes in. All right, let's stop for a second. Right here, what do we see? We have the formation of equal lows. So 1, 2. So price comes in, taps this area. Now, on a 5-minute, we spend 15 minutes here collectively on this push down. Price pulls back up, doesn't really come into anything, just into this wick, right? Then price pushes back down. What do we have? Formation of equal lows on the 5-minute. If you're on the 15-minute, what does it look like? It looks like we're forming a range in that area. So what is this signaling to me? Well, equal lows, either one thing is if we got a change of character. So if we saw, let's say, price is coming into here. So this is the swing high on internally to this swing low. Price pushes up, swing high, swing low, equal lows. If price takes out this level and I see a reaction to here that holds this level, then I would be potentially looking to take long into another supply zone that's unmitigated, right? Which could be in here, could be in here. Something like that could happen. Now, the reality of this is that because demand is still down here, I don't want to take a buy from the middle of nowhere. If we reacted to this zone and we did get a change of character, potentially like that, then I would consider it. But because the swing low on the 5-minute or on lower time frame is we have this reaction, push up, that's the extreme, and then we have this one swing low. This is a swing low. This is the swing from here to here, right? So let's, work that out. This is the swing. So in order for me to get a change of character, I have to see price take out the swing, the extreme of that swing. So I'd have to take out that level before I want to see a pullback to go continuation. And because that does not happen, even though we take out this level did not create a new low. We did not get a candle closure below these wicks. And so this is what we say is a this is weak. This is going to be a weak low. If this high does not take out this, and therefore we will continue targeting this. Now, we're creating inducement for further shorts is the way I see it. So once we get this, what am I seeing here? We get a sweep up here, and then price is coming back down, and this is how I created my third entry. It might be right in there. Yep. So here's what I did on my third entry. When I saw price sweep to the upside, I said, more than likely, I think we're going to have a pullback short to continue to the downside, or what we could have is price is going to just continue. So what I did, in this case, I did use the 1 minute, but my entry was on the 5. And this is what I would say, I set a sell stop entry. So these are not very common entries that I will take. This is something that I've relatively just started doing. And so a sell stop, instead of setting a limit, so a sell limit would be when price is coming up into that zone, taps, triggers you in, and then goes down, right? A sell stop would be when price is above that level, and you want to get in when price sells through that level. So if it does this and it sells through, now I'm in, and all I'm waiting for is to make sure that this high is respected. If price comes up above here, I'll be taken out. But because the way I see it is, if this reaction that created that swing low on that lower time frame, this one is the high that broke structure to the downside, then I am expecting that one to not be breached, and then I would stay in the trade. And so that's what I did here. On a 1 minute time frame, this is what it looks like, right? I set my sell stop here, and I said, okay, so if price pushes up, I see that what we did is we reacted to this sweep in here, right? We don't necessarily need to mark it out, but if we want to, just for the sake of, you can understand what's going on here. So what we saw here is we have a liquidation of the highs in here. We have a mitigation. We have a V-shaped recovery, right? This is a little bit slower, but we're on a 1 minute time frame. Obviously on the 5 minute, it's just like 2 candles. So sort of a V-shaped recovery. We check out the swing. So, you know, and this would be if I set a limit on this, right? But the way I took it is when price came in here and respected this, I'm expecting this to hold. So this push up, price is selling down. What do we have here? Some sort of reaction to this level. This is where price paused before creating this leg up. So this was a small pullback on the 1 minute. So what I would expect is if this price reacted, pushes up, if it continues upward, well, I'm not going to get triggered, right? It'd be like this. If it continues to the upside, I won't get triggered. But if this is going to respect this area, then what I want to see is that I'm going to get triggered in if it shorts. And because we created equal lows here, and this was a sweep that took out the highs and mitigated this level, I was expecting this to hold. And so that was, I would say, probably one of the riskier type of entries that I'll take. Same as this one, right? On the 1 minute time frame, this is what my entry looked like. It's insane, right? On a 5 minute, but I set a sell stop. So when price sold through and it created an engulfing candle here, price remained as long as this high wasn't taken out, right? So that's where price paused. So if we went to, let's say, a 15-second, just so you can understand the market structure on this lower time frame here, right? So we have this, this is the push up, price pulls back, comes back up, relatively equal highs. This one broke structure to the downside internally. So this, you know, while it created relatively equal highs, it is still a little bit higher than here. So, you know, you could say that this is a change of character because we took out the initial push up right here. So now we're bearish. You could have taken a trade off of this one, right? But for a little more confidence, you can also wait till we get out of that supply zone. Once we see price comes down here, we reacted to this level, which is what? This is the sell to buy that pushed price into the supply zone. So what are we expecting? We're expecting a reaction. Price pulls up, comes back, bounces from here. As long as price does not take out this level, if it takes out this level, it's because we're continuing short. Now, we did get a change of character here, so we are bearish, right? So we wouldn't expect price to just do this. It wouldn't make sense for this area. So I set my sell stop just below here, and you can see price just sold through and triggered me in right here. So when it pulls up, same as before, right? Look, we're protecting the highs now. None of these are breached, and we're targeting the lows. Low, liquidated, low, liquidated, low, liquidated. This should not be breached, and therefore I'm confident to set that trade, because if that happened, we're getting a reaction that's showing us more bullish intention. So in this case, because it was bearish, I felt confident setting that entry, and so it was set on the using the 5-minute zone, but just looking at the 1 minute and understanding, having a greater understanding of what's going on, right? And so I set that, price sold through, triggered me in. Obviously, you saw it did not take me out. So let's see what happens. Let's continue. Creation of more equal lows. We're just building tons of liquidity there, right? And so remember, look, we are respecting this level. Price is continuously coming into that area, but it's not going to breach this area. Now, what could we see happen? Well, you could say that this, although this did not necessarily do anything, it did not break structured downside because we're just forming equal lows here. We're building up so much liquidity to take. Now, none of these came in to tap this zone. So, because this area hasn't been tapped, there's no reason for me to think longs yet, right? This might scare off some people in shorts because it looks like it's holding, it's creating a support, as some people would say. But it would not breach this level. If anything, price could come in to mitigate it, and that's it. Let's see what happens. And then let's keep going. We're respecting the highs. We're building up liquidity for the highs to be taken in the future. And then let's see, go a little faster. And then there we go. What did we do? Price came in and liquidated this level, obviously, because why? The demand is actually below this area, right? So price came in. This is where we hit take profit, automatically took us out of our trades. And what did it do? It liquidated this zone. This demand zone was liquidated just as we previously mentioned. And why? Because there's no structure on the swing. This is a very clean push. There's no structure in here, therefore there's no inducement. So we had to create equal lows to take, and then we also liquidated this level, and price came in to mitigate something in here, which is the extreme. So that's how we caught 3 trades. This one was 5.6R, this is 20R, and this is 4R. So what is that? That's just about a little over 30R. So 30R using 15-minute market structure, 5-minute entries. To summarize what we did here is we didn't have to take into account to the higher time frame too much. All we did was we paid attention to what? To where supply and demand is. We were waiting for reactions. We saw when we got a change of character on the 15-minute that we assume is temporary until we come back to a higher time frame supply zone to realign price bearish, or to take out that level and confirm bullish intentions, right? So temporarily, this is in a complex pullback. Let's show the rest of the market structure, because I think there we go. So we had a change of character, price pulled back, we got a strong reaction. This is an area that's targeted for the future. We have not tapped into supply, so demand is still in control. And all we did is on a 5-minute time frame, we looked and targeted discount demand zones, and we traded a flip. So price reacted, formed an extreme, took out the reaction. All we did was we waited for price to come back into a strong level, and we took an entry there. The other one we did is we took a buy to sell wicks for continuation to the downside. Once we took out the reaction, the pullback of the reaction that liquidated that initial reaction, we have confirmation to the downside. Since we have not yet tapped the demand zone, supply is still in control. We took a sell stop on a reaction to a supply zone, and when we got that, price kept us in. We formed equal lows, so we created inducement for the downside, and then we liquidated that. We took out the demand, and we captured 30R on Bitcoin on a Saturday within 3 hours. So I hope you enjoyed that video. Let me know if you want me to make more videos on Bitcoin and cryptocurrencies. This was the first one, so I hope you enjoyed it. Tune in for the next one. Happy Sunday. Great trading for next week. Have a good day.